Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the S&P 500 Cash Index. This is the daily chart of the market. This is our official market timing. And as you can see, for all intents and purposes, the market is fully bearish. We mentioned last week that there was a trading wedge formation forming, and the break was going to be particularly impressive, and we expected the move to be lower. And of course, that was in the midst of this constrictive narrowing range, and of course, that's what we got was the break lower on the 10th of March, and of course today's the 18th of March, and although we've had a bounce, the move, we'll call it the low of the prior day, 1312 down to 1050. So a nice 60-point run in the anticipated move by the MiniAnalyst.com of a break lower amidst and a significant break lower in the market. And one would construe that 60 points would be argued a significant move anticipated. And of course, those of you watching your free trading videos and market analyses certainly benefited from that recommendation. But nevertheless, from an official standpoint, we are bearish, of course, certainly below 1300. The bears are in total control of the market. We'll call it 1290 to 1300. Both trend following, now price technical, and certainly psychological being the roundness of the 1300 level. Certainly 1250 has kind of got a ring to it as well. 250, 500, 750. So there obviously is some technical significance there from a psychological standpoint, but nevertheless the bears are in full control of the market as we have anticipated. And now what's even better is we've got the joining forces with the both momentum and directional movement of the market. So we have now momentum, trend, directional movement, price technicals, and psychological suggesting the market is going to go lower. Now, of course, there will be a nice stop, or should be a nice stop around 1200 to 1225. But as we mentioned, certainly over the last, anywhere from 1300 to 1350, we mentioned that we were closer to a top and did expect certainly the market to correct going into the summer and certainly into the fall. We're definitely near a top, and so far that has come to fruition. So one of our key swing models, as you can see, the MRS-EM continuing to nail it. Jumped in on the short side a bit late, one could argue, a bit late. Actually, not really. I mean, if you look, we actually had the breakdown here. Well, okay, we'll give you a bit late. We'll go ahead and close that right there. Pull up a there it is, beautiful $80,000. Just an amazing system, and right back to the long side is the case at around 38. We're now at 4150 or so in the EM contract. So that's MRS-EM. The MRS-TF is actually long as well. The MRS-YM is still short and in very nice short position, and the MRS-ES is also long. Getting kind of a reversal today as the market has jumped back. Actually, we can go ahead and switch over and take a look at the here's our swing system 5.0. Actually got stopped. It was long, but got stopped, and has jumped right back in on the long side just after a stop loss, ironically, and fortunately so, because we're now back to a gain of around 150 points or so in the market after taking this loss that you see right there. But it held on for a massive long trade. Was the swing system 5.0, but we're actually looking for excuse me, there we go. This is a chart of the intraday market, and as you can see, we're getting a beautiful bounce right off our key measure of trend, our trend fulcrum, if you will. The bulls are in total control. Well, save one indication, but they're in total control. We've got a gap, simply retracing the gap to the trend. So it's a beautiful long opportunity. So we'll go ahead and, for informational purposes, send out a long buy right here at 77.50 or better, and certainly we can target a move to new highs later in the day, given the bears are in total control. As you can see, we did get a very similar formation yesterday. Gap to the upside. The bulls were in total control of the market, as you could see, but the bears weren't willing to give it up just yet. But again, those who sold right here certainly paid the price for not at least sharing our analyses, and the market was likely to head higher. But nevertheless, they certainly sold on the break of the trend. One would have to stop out this trade. Look, we're already up a buck point anyway, so hopefully you get this video and can get in alongside around here. And we don't have a mirror image. Often traders will have is that the correct terminology? A mirror image, having the same exact trade setup as we had the day prior. I don't think that would be a mirror, but nevertheless, same setup as yesterday, a break of the trend. But if we do have that, go ahead and jump in along again on a move about 5 points below the trend. So here this long setup is already coming to fruition. As you can see, we'll go ahead and get this video out to you in relatively short order, hopefully. So you can buy, we'll call it anywhere from 76 to 78 or so, and of course target 85 to 90 on a couple of half positions. Nevertheless, so we're going to go ahead and switch over and look at what were we going to look at? Actually, this is a great time to get involved in our portfolios. A couple of things to talk about. We now have the Q Trader on a monthly basis, $350 a month, and you can save 20% off of that if you wanted to just test it out. The Q Trader has actually been an underperformer, so I'm not sure I would recommend that over the last 34 days. Although it's been known to have our underperformers certainly outperform in the next phase, so one could argue either case on that respect. Nevertheless, it is a blatant underperformer, down 1% over the last 34 days, and we've had a bit of a clip, ironically, on the move lower. As you can see yesterday, just in our proprietary indicators, our intraday dynamics, I mean, the market's a bit choppy. The bulls, and they don't really have nor the bears, neither party really has total control, and so each is allowed to exert its own force at any given time. And of course, what's going on with Japan as well, bringing a lot of cross currents in the underlying market. Nevertheless, over the last few days, last Thursday, 2,200 for black, and 2,000, then dropped 4,000 in black. On Tuesday, we have Fed Day, so we turned off our day traders, and dropped 4,000 again and 2,000 yesterday. So we're having a bit of a drawdown. So definitely, let's say you saw the amazing recent gains lately in MACD version 4.8 HR. I don't know, up 80, 100% or something like that. And I mean, if you're like, okay, this thing must just go up in perpetuity. Well, it doesn't happen like that. Our portfolios trade just like markets do, and you definitely want to take advantage of retracements and not chase highs. So there you have a drop of $1,170. Certainly you missed out on $1,000 there, $1,200. But if you had gotten in, say, oh wow, $1,300 MACD version 4.8 HR made. Now it's made another $1,000. Gosh, it's $3,000 or $2,200 and $2,300 in 2 days. I've got to get involved in that. Well, then you drop 1170. You don't trade on Fed Day, and then you drop another 760. Now all of a sudden you're like, gosh, it had just made 2,300. I joined, and now it's down 20 something hundred. Oh my gosh, another 2,000. I've lost $4,000. Well, that's what happens is, so now what we always advise clients is to get in after a drawdown. If you're interested in a portfolio, wait for a couple of days losses at least, so you can make that money. So essentially, anyone who's waited has made 2,000 yesterday, 760 the day prior, and 1160 the day before that. So made about $4,000 just by holding off. So definitely, I mean, you can almost consider that profit. So definitely great opportunity, time to get involved because we will make money. And if you guys have any questions, so let's actually go ahead and look over at the so if you go to QTrader, let's say, now if you want to subscribe to any of these portfolios, any of these venerable portfolios, if you will, these are our primaries, other than the ultimate line. Now, of course, most of the trading models in here are available in our ultimate line, so we would definitely encourage you to take a look at those. But if you're interested in just what we track right here on a daily basis or purport, then you can write into admin at MiniAnalyst.com, and they'll take care of you, I'm sure, in getting you set up with one of those portfolios. But you can also subscribe to a monthly of the QTrader, and right now you can actually save 20%, I believe, on a lot of the, there you go, enter promo code video right there, not Vic, and you're going to save, we'll call it 1 there. You're going to save an extra $70 a month. So just $280 a month to trade the Q Trader in full automation. Of course, we have no other fees. You just certainly will pay your brokerage, the round turn fees or what have you. But as far as our fees, auto trading, this is the fee you pay, and you get all 6, maybe 7 systems. Now you may look at the other systems and, oh, well, this one's only $200 a month. Well, here on the Q Trader, you're getting, this should be right here, 1, 2, 3, 4. So you're getting 4 models. So each system would be, there's the profit that you've had in the Q Trader over the last few years. Trades the Evo Swing System 5.0, Day Traders 15 and 16. And this, of course, was market leading, I believe last fall or whatever, out of 600 portfolios. At least that quarter. Oh, there you go. There's real-time tracking, third-party tracking, 400% or so. Not too shabby. Annual 220%. Total profit 353% in third-party verification. But so, well, that system's only $200 a month. Well, here, you really have to look if that system hits a drawdown. And believe me, we've seen some systems that just look amazing out there, just crater. And that happens a lot. But if you have diversification over several trading models, non-correlated, and certainly non-curve fitted or optimized, then you're going to have a better result, and your result's going to more closely mirror over time 353% return over time, and that of course is over what is that right there? 2009, March of 2009. So 2 years or so, 353%. Now, it's not setting the world on fire, but certainly 175% or so a year is, in relative terms, setting the world on fire, actually. So, I mean, we target real returns of 100 to 200%. A lot of our portfolios will have 3 to 500% returns. Certainly some, systems, and it's based on margin and what you're using as well. But this is a $10,000 account. And this has the Q Trader has one swing model, the Swing System 5.0. You can actually sub that out for the MRCM, which is actually, well, no, they've both been outstanding over the last few years. And of course, the Venerable Evo 15 and 16. So it's a great model. So this is $800 a month. You're looking at other systems, $200 a month. Well, that's $800 a month if you want that kind of diversification. Here, $280. A month. Now, traditionally, up until recently, the portfolio was, I guess we have to go back down here. Q Trader was $1,200 for good God, $1,200 per quarter. So this portfolio has really been reduced to encourage participation. We want you guys to make money. $1,200 6 months. That's $200 a month. That's for 4 systems, 4 non-correlated systems that are, number. Well, you just saw the returns, 150%, I think, that quarter. Now, obviously, it's been an underperformer recently, but as we've mentioned, you can. Those underperformers can certainly. I mean, we would rather buy an underperformer than one that was hitting new highs, because again, you're going to get corrections. We just saw $4,000 in MAPDT version 4.0 HR, so that's a great opportunity to get involved in that portfolio. It's also a great opportunity to get involved in the Q Trader that's been underperforming relatively, and considering that that was just over the last 34 days. Down 1%, but third-party tracking, there you go, 353% over the last couple of years, 220% annual profit. And $45,000 in gains on a $10,000 account. And of course, the margin is, as mentioned, or kind of what we were talking about a second ago. You have the overnight margin here, $5,000, we'll say, on the YM. I'm not sure exactly what it is. Maintenance margin maybe $4,000 once you have a position, and of course just a margin of 500, 500, and 500. So margin really of only certainly maintenance margin of maybe $5,500. But we recommend $10,000 for the portfolio, even though that's certainly more than a margin is required. But yeah, you can get involved in that portfolio for $280. Comparably speaking, you get 4 models, 1 lot each, so would be $800. for 4 other non-correlated systems in which, in conjunction with one another, you can have returns like that, $18,000, $1,600 for the year. Where was there was a few. You can go ahead and cruise or peruse some of our um, um, testimonials. Here's $20,000 that turned into $150,000 right there, and of course you see through, again, third-party tracking, 353%, so $45,000 on a $10,000 investment for $280 a month. Yeah, it's pretty impressive. So if you guys have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and hope you enjoyed the analysis. We'll go ahead and take a look at that trade. Oh, here we go. Let's go ahead and switch back over to that right there. Hey, so there's that trade. So you are going to be able to get into it. So 1280, as we've mentioned, 40s and 80s, the market loves. These 40s and 80s, should have mentioned that, but nevertheless, overpowering. Well, one would expect overpowering the 80. The significance of the 80 is the bullishness that we're seeing. Although this is pretty bearish, but I think we're just going to have a very similar scenario to yesterday. So we broke our trend right around 1266, and we'll call it 61. So yeah, 5 points lower. So go ahead and buy at 70 again, and that'll certainly just be roughly the gap fill. So another buy at 70. Go ahead and target 85. That's going to be our new trade. So again, if you have any questions, go to the website. Shoot us an email to MiniAnalyst.com, and hope you guys enjoy your weekend. We'll see you next time.